Good morning. Welcome to this Lumina Intelligence webinar around food to go. My name is Katie Gallagher, Insight Lead with the business. Today's webinar is centered around the food to go market and what to expect from it in the coming years. Lots of data I will share today has been explored further in our food to go market report published just a few weeks ago. If you are interested in any of the topics covered in today's webinar and how they might impact your business, please do get in touch. There'll be an email address at the end of the session for you to contact. Today I'll be sharing a brief outline of where the sector is, covering Lumina's expectations for market growth out to 2027. I'll highlight 5 key trends that are expected to shape the market in the coming years, including nuanced healthier eating, digital innovation, partnerships, multiple formats, and sustainability. And we'll be unpicking the processes, innovations, and adaptations that are fueling growth for stronger players in the market. Starting with a look at our key economic indicators, the economy is forecast to return to more normal historical levels of growth by the end of 2024. Risks to this outlook include volatile geopolitics, interest rates, and persistent inflation if low unemployment continues to lead to higher wages. And more recently, we have the announcement of a general election in July, which also bids for a level of uncertainty for the future of the UK. But more normal levels of economic activity from 2024 onwards will benefit the food to go market and support business investments in the market and players moving forwards. A return to more normal levels of growth in the economy will support a strengthening food to go market. Key factors impacting food to go include tourism and travel, and these are set to see a boost this year following the pandemic and a subsequent period of economic fallout. Employment rates are expected to remain at record highs, contributing to consumer demand for food on the go, meal solutions, and drinks as well. And food to go specialist channels, including sandwich and bakery, coffee shops, and contemporary fast food, are expected to achieve the strongest percentage growth rates. And all of this will contribute to see a total market value of 25 billion in the future. Looking at the trends that are expected to be the centre of operator growth strategies across the next few years, we have nuanced healthier eating, including a focus on gut health, protein and nutrient-dense foods that will influence new product development in food and beverages in the market. Digital innovation is aligned with artificial intelligence, and it's expected that developments here will mitigate staff shortages and help operators to drive operational efficiencies. We have partnerships that can be between brands and suppliers across FMCG and also food service, and it's expected that these will be explored and continue to boost traction for consumers, especially with what we're seeing this year in limited time offers to boost engagement. Multiple formats will capitalise on investment in forecourts, railway stations, and airports as operators leverage flexibility and differences in the types of outlets that they have. And sustainability is expected to be front of mind for operators in packaging and supply chain developments. Recent pandemic-induced challenges have fueled the growth of health and wellness trends, prompting increased consumer mindfulness around dietary choices and government initiatives aimed at national health. From our Eating and Drinking Out panel survey, we can see that 44% of food to go consumers tell us that they're very health conscious, and that's 2 percentage points higher than the general eating out market consumer counterpart. Leon has introduced a plant variety rating system this year that uses menu symbols to encourage consumers to top up their plant intake and guide them towards a more diverse and nutrient-dense dish. And this coincided with the launch of its veganary menu from 2024, aligning with growing gut health focuses on this wellness trend. Chipotle has done something very, very similar, also launching a new menu featuring nourishing lifestyle bowls designed to cater to and is aiming to make sustaining healthy habits much more convenient for consumers, offering dishes that are compatible with a variety of lifestyles, including those that are vegan, vegetarian, or perhaps flexitarian, just trying to cut down on their meat intake, but also high protein, gluten free, and grain free dishes as well. Health and wellness trends are a real key influence on new product development currently in the market. So for this report, Lumina collected data on new products launched in January of 2024, and this is just a snapshot of the key trends that were caught this year. We can see vegan, healthier eating, protein, gut health, and immune system boosting are all elements of products that have launched in the market and that are expected to remain more important moving forwards. Functional health was a new one for this year, and it's also expanding out to drinks ranges as well. Marks and Spencer's recently partnered with science-based nutrition pioneers Zoe to launch a milk-based gut health shot. And this follows increasing consumer awareness around the gut's role in overall health, with the brand stating that searches for gut health were up by 247% since 2021. And this collaboration sees M&S at the forefront of gut health innovation, aligning itself with growing wellness trends. And in addition, they've launched a range of good gut products, including cereals, yogurts, and drinks. And also aligning yogurts with the protein trends that we're seeing in the market. There's a lot of yogurts coming out into food to go ranges that have high levels of protein in them, and protein is called out on the packaging. So protein focus is a real focus for this year. Turning now to digital innovation, and to highlight why it is such an important area, it's good to start with the top reasons that influence food to go consumers when they're choosing a venue. So proximity and familiarity are the top influence. Lots of choice, easy ordering and payment options, and voucher and promotions loyalty cards are in the top 10 and have all grown in importance year on year, highlighted by the green colours of the bars. Many digital developments in the market are allowing operators to deliver on what customers are demanding in the food to go market. Thinking first about value for money, loyalty and promotions, digital schemes are on the rise and over 2023. Lumina expects that the uptake has driven trade up in the market. The proportion of consumers opting for both food and drinks was retained, even though those opting for just food declined throughout 2023. So digital loyalty is more and more important for delivering added value to customers, but also for collecting data and information about customers that can in turn be used to personalize offers and reward and drive engagement and loyalty in what is a very competitive market. Brands that are utilizing digitalization are aligning with on-the-go consumer needs. The first example I've got here is Costa Coffee, and they're using digitalization to enhance the customer experience. They've opened their first site featuring touchscreens to order and streamline operations. Other features here include a collection point for customers that are on the go to really separate that service and make that service quicker for customers, and a new mobile order to table feature with a QR code that's scannable on the Costa Club app. Canoops launched its next generation app that enables customers to tailor and pre-order their favourite bespoke chocolate drinks. And the app really enhances the customer journey, supporting the brand in extending its market reach beyond its current loyal consumers it's built up. And Subway is also looking to enhance the digital experience by introducing self-order kiosks to its UK sites, being rolled out across 2024. For the first time, and as part of its digital transformation strategy, these features are looking to modernise the brand and to compete with QSR giants like McDonald's, KFC, Burger King, who have been rolling out touchpoint kiosks throughout their sites for the last few years. And when we think about how artificial intelligence will impact the sector, I've broken out its impacts into the front of house impacts and the back of house impacts. So for the front of house, it will be things like social media content and copy creation to target very specific customer types. It might be that AI can help personalize the customer experience through online ordering services and digital marketing. And also what we've already covered is that self-serve technology, including kiosks, digital ordering platforms, and digital payment or split bill technology. For back of house operations, it's all about driving efficiencies. Integrated inventory and purchasing through software, allowing historical inventory and purchasing data to reveal trends and make recommendations for current purchase needs. Also, artificial intelligence enabled software will be able to track staffing and sales data to determine trends and patterns so that rotas can be allocated where staff is needed to make sure that that is efficient, and also sales to really unpick trends in what the new hot topic is, and what products are really selling well, so that this can be used to drive efficiencies in future menus as well. Shifting gears to think about partnerships, I'm first scene setting with the forecast size of the prize in food to go across the next 3 years by channel. Convenience store grab and go has achieved strong food to go growth versus pre-COVID, really driven by investment in ranges and value. The introduction of tiered meal deal ranges has allowed grocery operators to avoid hiking costs of meal deals whilst introducing more premium and food service standard levels of range. And convenience store grab and go is forecast to lead absolute value growth in the next 3 years. Operators including Sainsbury's and M&S have stressed the importance of food to go in their strategy reviews when they're thinking about what trends they will be especially focused on in the next couple of years. And we're seeing players in other channels opt for partnerships with grocery players to boost distribution, locality, and availability for customers. Greggs is just one example of those players, expected to play a really key role in sandwich and bakery channel growth, pushing forwards with really ambitious growth plans, including new distribution centres and food innovation. And it's accelerating its partnership with Sainsbury's, offering its first standalone cafe within a supermarket. And this follows on from the Greggs concessions launched in Sainsbury's forecourts, which proved popular among consumers last year. The partnership will help the brand to diversify its retail estate and to extend its current reach. Tesco has created a tiered meal deal offering with the launch of its £5 premium meal deal, and this gives shoppers the option to level up their lunch whilst retaining entry level offers as well. So partnerships really are driving quality propositions in the market, which is essential to get that trade up from customers. 86% of food to go consumers think that good quality has a price, whereas 73% are happy to pay more for higher quality. So there really is a market for that higher price in food to go. Fusion of premium add-ons and tiered price points provide operators with the opportunity to upsell, driving trip spend whilst maintaining strong value for money credentials. Another element of partnerships that can be between suppliers, retailers, or food service operators are limited edition and premium products that are focusing on elevated and innovative flavor combinations, generating hype and driving footfall and incremental sales. And on the slide is just a couple of examples that we've seen so far this year from Tesco, Burger King, and Gales, really looking to elevate the experience with a limited time offer. We're seeing more and more of this, especially throughout the larger grocers that traditionally have had quite stale menus for quite long periods of time. Turning to multiple formats and looking first at outlet growth and expectations into 2027. So outlet growth in channels including coffee shops, bakery and sandwich, and travel segments is forecast to accelerate from now to 2027 versus the period of 2019 to 2024. What's expected to underpin this is investment in transport hubs, commuter belt towns, and high streets, offering opportunities for formats that are diversified from the classics we see, such as kiosk-style operations, but also the larger drive-through sites which customers can park and enter into as well. When we look at the share of food to go occasions by area, we can see that high street and city centre enjoyed some recovery in the last 12 months. Retail industrial parks is where share detracted as consumer volumes returned to high streets and city centres. And this shift back towards city centres is expected to be felt more strongly in 2024. We've already returning to offices more frequently, and there's already been fewer rail strikes than there were across 2022 and 2023. All of these things are expected to contribute to stronger levels of footfall in those office dense areas that are likely to be in city centres. The past year has seen a resurgence in both domestic and international travel, as well as a return to more traditional commuting patterns. And this resurgence is driving foot traffic to travel hubs, making them really attractive locations for operators. Drive-throughs present a cost-effective opportunity for brands to expand into white space, boost accessibility, and generate greater transaction volumes. Lumina expects expansion in the space of drive-throughs to accelerate in the coming years, and all of the operators seen on screen right now have invested in drive-through sites in the last 12 months and are looking to do more so in the future. Investment in transport hubs will bring opportunities for food to go operators. Investment will fuel projects including station and rail upgrades and new lines and stations. And Network Rail announced 43 billion across the years from 2024 to 2029, so a large amount to be invested. So food to go specialist giants including Greggs and Cafe Nero have been already prioritising openings in newly reinvigorated transport hubs, including London's Liverpool Street Station, following the launch and the opening of the long-awaited Elizabeth line. And Tortilla is also adding to travel hub sites, opening 4 with its franchise partner SSP in this year, with a format seen as a key growth driver for the brand. Greggs is also partnering with airport sites, opening a record site for the group last year in its Gatwick site. Our final trend today is sustainability, and after a few years of waning importance with value taking attention, operators are prioritising sustainability initiatives with continued government focus and legislation around food waste, single-use plastics and packaging waste ongoing and expected to ramp up in the next few years. An operator that won the finalist in the sustainability category for MCA's Hospitality Awards in 2024 was Gales. So I thought I'd share a couple of the things that this brand is doing to really level up on their sustainability credentials. So Gales has a three-pronged approach to sustainability, looking to have a positive impact on the environment in three key ways. With its supply chain, in-house operations, and within the communities in which it operates. So key examples of sustainable practices throughout the company include the brand's support of small producers who practice regenerative farming. It's working with Wild Farmed, a company that's aiming to restore and diversify the natural habitat. The brand remains flexible in its offering, for example putting crisps on its menu for the first time in 18 years to help a supplier use its glut of potatoes in 2023. So that's all from me today, but just to leave you with some key highlights of today's webinar. Market growth in food to go is expected to accelerate at 2.8%. Food to go consumers are more health led, leading to nuanced healthier eating that's expected to continue to impact food and drink development in the next few years. Digital innovation is allowing operators to cater to needs, but to also mitigate challenges around costs and staff shortages. Partnerships are driving spend and premiumization in the market through limited time offers and food service standard ranges in retail. Operators are expanding with multiple formats, allowing them to really capitalize on opportunities in travel hubs with kiosk style operations and drive-through sites as well. And sustainability is expected to be a business priority going forwards from 2024 after a brief period of value really taking over for customers last year. Thank you so much for listening today. I've been Katie Gallagher. If you do have any questions on the content shared today, please get in touch with our inquiries email shown on screen now. Thank you.